If you were interested in buying or selling Tesla stock this morning, just pick your price. Yeah, you could go all the way from no change at all, almost going into the red, all the way up to up over 10 just in the first half hour of trading this morning. Well, the optimism in the business community is massive, according to every poll. We'll be talking about that more in a minute. Is this optimism misplaced? Will the optimism itself create a better economy? The investing class is exuberant. People are just piling more and more money into the equities, not so much into the bonds, but definitely into the equities. And, it would seem to follow that an upsurge in these equities is sustainable, or is it not sustainable? There's tons of money on the sidelines, tons of money coming in from other countries. Or is this a time with all this exuberance and all this optimism when the smart money will start to sell? I don't know. I really don't. It's kind of an odd spot right now. Not sure that there's any historical examples that we can look to. But at least as far as this morning is concerned, the markets are up. The Dow struggled a little in the beginning, but even it is up over 100 last time I checked. Tesla, all over the place, as I just mentioned. Seems like 450 is going to be the psychological barrier. But what has happened to the last few psychological barriers? They've been like whistle stops on the way to higher and higher numbers. Of course, overnight or yesterday, the big news was that Dan Ives had raised his price target to 515 for 2025 and his bull case to 650, kind of getting into similar territory as moi. Anyway, that seems to be the new normal. Pretty much everybody is coalescing around my $700. Mine, of course, is $700 plus plus. Always keep that in mind. My $700 does not include a full rollout of robotaxi. I believe that'll happen, but I believe that'll cause the stock to be far above 650. I'm above 700. My 700 also does not include a reveal day about Optimus. I mean, a significant real reveal day where they show hundreds, thousands of robots working in multiple different tasks. Now, there's some videos out this morning on X that you might want to check out. These factories in China, some of them are building hundreds of robots and showing them doing lots and lots of tasks. Weird looking robots, not exactly smooth, not cool like Optimus, but nevertheless, it's worth watching a few of those videos. Maybe they're all AI. I don't know. Anyway, so Tesla is going to go up and up in 2025, but that doesn't mean that it's going to do it without pauses and retracements. We have the Fed decision tomorrow, which could impact everybody. Everybody's assuming the cut. I'm assuming the cut, but I'm also assuming that there will be a hawkish statement about future cuts because there's a lot of exuberance out there and no real evidence that these cuts are justified. Dan Berkland is the one I chose out of all the people that are trying 13.2.1. He had a summary. He had a very long description if you want to go look him up on X. And then he has this summary. It is now apparent that driving manually is no longer a necessity when you get into a Tesla equipped with FSD version 13. Even long-time Tesla owners familiar with FSD beta 10, 11, 12 might underestimate how capable version 13 has become and how closely it resembles a safe human driver. We're at a stage where we're fine-tuning comfort levels and seeing hundreds of miles between disengagements. While my critiques aim to further enhance FSD, I believe this version is ready for a broader release, and I hope that the Tesla AI team will roll it out to the wider A14 equipped fleet soon. Wait, how come he doesn't want it to be sent out to the A13, the folks with AI 3 or whatever we call the hardware 3 now. Anyway, great work, he says to the Tesla team. Keep it up. You amaze me. Yeah, listen, even the version I'm on, which is the version 12.5.4, I think, absolutely incredible. Drove it 150 miles or more over the weekend without any disengagements, nothing. No, I mean, none. Zip. One acceleration in an intersection where it seemed it didn't want to go. Brad Ferguson has this advice this morning. Take this advice. Please listen to this advice. You know that my channel, my X thread, whatever you call it, my what I'm talking about on X right now. I've been spending a lot of time talking about what this wealth. You are possibly, maybe you're already a Teslaionaire. Maybe you will become a Teslaionaire. At least you believe you will. Are just, maybe have 500,000 or 250,000 in Tesla stock, and it will put you in a position of having greater wealth than you've ever seen before. But with great wealth, with these kinds of accelerations, with unexpected wealth, comes craziness, nuttiness. So listen to what he had to say this morning. He says, look, my sense was more people were using options and or margins with their Tesla. So I ran this poll. And I've talked about leaps. I just did another video on leaps last week. I think leaps are a great idea, but for a tiny fraction of what you're doing. He says the use of both options and margins are double-edged swords and not edge. The edge is not a good thing. I know multiple people have lost 8 figures in Tesla from leveraging. So the poll said that people that were only doing stock was only 54.7 of those that answered the thing here. And this is 854 votes, so not small. Those that were using margins in addition was 7.5%, plus options 21.7%. So those using stock and options 21.7%, and both options and margins another 16.2%. So over, like 40 something percent are using either and or options and margins. Brad Ferguson goes on to say, he says, I could write a book on this, but the problem boils down to investing with certainty plus goal creep. Here's the critical part, and risky investing instruments. He says, let's break it down. You are certain. We are all certain. We know something is going to happen. We know that Tesla is going to go crazy. Now you can apply this to other people, NVIDIA, go down the line, Bitcoin, etc. So you're confident. You've got this positivity about it. So you put over 10% in to these options and more risky investments. But many want to really benefit. So you say, well, okay, I could make a lot more if I went in higher than this with margin or higher than this with these options. And so you go 50% or even 100%. He says, he says you shouldn't do it. So Tesla or whatever stock starts running, you're so certain you're looking at large gains, but you're dreaming of bigger gains. And so you get goal creep. What if instead of making $1 million, I could make 10 million? Why not 100 million? After all, I'm smarter than the guy with 10 million, so I could make even more. What could happen is that you put too much into stock options, and the higher the strike and the shorter the term and the more risky, or you take too much in the margin and end up in a situation where you take massive losses from some previous high that you may never get back to. I've seen someone go from 35 million in the Tesla community. We all watched this last year, 35 million in Tesla stock and options, net of margin, to owing the IRS more than their account was worth. Bankrupt. Yeah. How does this happen? The stock turns on a dime. It just stops teleporting higher for no reason, no clear reason. Not only the stock goes down, but the losses in options are magnified. The brokerage raises the margin requirement, forces you to sell stock at a low point. So he says, I know you're certain about what you think will happen, but it will play out differently. Set limits. Don't gamble money you can't afford to lose. My suggestion is with regard to options. This is a suggestion, not advice. It's Randy's rules. Don't bet more on options that you could care less about losing. It's like, oh, well, if I lose it, who cares? That's the amount, only that amount, no more. And don't go crazy with this. Oh man, I could be worth 100 million. Who cares? After 5 million, honestly, it really doesn't matter. Okay, he says, riding a rocket sounds like fun until it isn't. So don't let future regret of missing out cause us to take unnecessary risks. Investing is about managing your emotions. Oh, so I was really surprised. He says he's really surprised to see how many people were investing at the levels that they were investing at. Okay, part two, of course, we get into the general economy. Hang in there with me because there's a lot of very important stuff in the second half here. This is Randy Kirk. Hit like, subscribe, and notify. Regular programming today with Larry Goldberg later, followed by Brian White. I already know what the Brian White show is going to be about because I've already written it. And man, I've written my part. He's going to respond. It is fascinating stuff about the robotaxi nobody's talking about. Okay, so we'll be getting into that later today. Hit Patreon if you'd like the Christmas, you're handing out Christmas presents. How about $3 a month, $5 a month, $10 a month to old Randy? Okay. Empire State Manufacturing surveys out this morning. Little changed activity in New York State, according to the December survey, after shooting up over 40 points last month, but then it stayed there. The general business conditions index fell 31 points to 0.2. The new orders and shipments index retreated, but remained positive, pointing to modest gains in both orders and shipments. Unfilled orders continue to fall. Inventories index climbed to 10.5. Inventories are growing. Delivery times index fell 11 points, suggesting that people are getting the stuff out the door quickly. Labor market conditions worsened. The index for number of employees moved down to negative 5.8, and the average work week fell to 3.9. A small decline of both employment and hours worked. Prices paid index also fell. That's good news, to 21.1. Prices received index declined 8 points also. But here's the key. Firms remain optimistic. Firms were fairly optimistic that conditions will continue to improve in the months ahead, less so than they were in November. Now, remember, this is very liberal territory. The index and that matters. It does. People that lost the election, people that are liberal, have a lower analysis of what the future is going to look like. The index for future business activity fell 9 points to 24.6, but 42% of respondents expecting conditions to improve over the next 6 months. Inventories are expected to grow. Capital spending plans remain modest. Okay, then we've got the S&P Chain Volatility Index. In November, U.S. manufacturers, particularly in consumer goods, increased their safety stocks to help blunt any immediate tariff increases, according to John Pietek, Vice President, GEP. In contrast, Chinese manufacturers are getting busier as a result of government stimulus and growth in exports led by the automotives and technology section. Strategically, many global companies have a wait and hope approach while simultaneously planning to remake their global supply chains to respond to these tariff situations that are coming. So the tariff thing is already impacting people's decisions. They're building up some inventory, and they're also looking around at how they could move things out of China into Vietnam, etc. Barron says this morning, the return or the yield on the 10-year government note pushed past the 20-day moving average of 4.293 on Thursday. I've been talking about this. Then it spiked even higher, topping 4.4 during intraday trading on Friday. This is a leap of 80 basis points in September before the Fed first started cutting benchmark interest rates. Bond yields have risen because someone somewhere is selling bonds, causing prices to fall. Yields and bond prices, of course, move inversely. Admittedly, the market has, quote, admittedly, the market has cheapened more dramatically than we anticipated, writes Ian Lingen, head of U.S. rates strategy at BMO Capital Markets. This is the market setup. Right now as the Federal Open Market Committee gets ready to meet on Wednesday. Investors betting on future interest rates. By the way, I said Tuesday earlier, it's Wednesday. Investors betting on future interest rate moves expect the Fed to cut a quarter point with a federal runs rate in the range of 4.2 to 4.5. Bond investors are not liking those cuts. As I've been telling you over and over, on average, 10-year yields rose 9.1 basis points in the 5 days after the two previous cuts, to up to 9.6 basis points after the first and 8.5 after the second. Investors demand for more premium or yield to own government debt, especially long-term debt, because the short term has been coming down, reflects concerns lower rates can be inflationary in a strong economy. The market's expectation for average annual inflation over the next decade is now 2.33. That's fine. That would be okay compared with 2.02, but see, it's going up. Deficits are another part of the story. The Treasury Department is expected to put more bonds on the table next year as a way to fund President-elect Trump's spending initiatives and to cover a revenue gap from tax cuts. Higher supply typically equates to higher yields, but that doesn't take into consideration DOGE, which will cut government spending, hopefully by more than those other things. There are also concerns about who will buy the debt. Japan and China, the world's top holders of U.S. treasuries, have been trimming their ownership, recent data shows. China has instead bought gold, now owns a lot of gold. Another red flag for demand comes in the form of a weak 30-year bond auction on Thursday last week that pulled yields higher on long-term bonds. Still, overall foreign ownership of Treasury debt is at a record levels as countries such as the United Kingdom, Canada, France, and India have stepped in to buy more debt because it's so high. The U.S. Treasuries are the best thing you could possibly own for safety, almost like buying gold. And yet, so these countries are wanting to buy at 4.5. I mean, at 4.4. I mean, this is not investment advice, but I think it's one of the best buys you can have out there for what you want to call long-term stability. The composition of foreign buying has changed overseas, but buyers are still very active, according to Mark Cabana, head of U.S. rate strategy. No one can easily quantify how much of the recent rise in yields is driven by inflation fears or concerns about higher supply. Foreign buyers are the poor auction. The good news is the Fed hasn't shown fear of the bond market and is making decisions on its own terms. Yeah, by the way, it's normal, very normal for the Fed rate to be under the bond rate. This is not unusual at all. You know, we do take financial conditions into account. If they're persistent and if they're material, then we'll certainly take them into account in our policy. But I would say that we're not at that stage right now, says Jerome Powell at the last meeting. At the time, 10-year yield was at 4.341. It closed on Friday at 4.398, even higher. Yields could rally even late next week or even after this cut on Wednesday, probable cut on Wednesday. But unless they start creeping toward last year's high of 5%, don't expect the Fed to come running to soothe the bond market. I don't think we're going to go to 5. I think 4.5 is max. I don't think it's going to go over 4.5. I hit it last time. I got it exactly right at 5%. You can go back and look at my videos where I said over and over again, it will not go over 5%. And then it went down from there. 4.5, that's it. So it's a great place to get in if that's your where you'd like to live. And by the way, as we talked about Bradford Ferguson's comments earlier about risky margin purchases are going out and getting a lot of options. The treasuries are the absolute opposite. I think you know that already, but they're like the most stable thing you can do. It's a good idea to have some of that in your portfolio according to Randy's rules, but not investment advice. The flash PMI this morning. Okay, here we go. Survey data signaled a further acceleration of economic growth in December, with output rising at the steepest rate in 33 months. Firms' expectations of output in the coming year also lifted higher, hitting a 2.5-year high, reflecting the growing optimism about business. About these business conditions under the incoming Trump administration specifically. Employment also edged higher, up for the first time in 5 months as firms expanded workforce numbers and a brighter outlook. Expanded workforce numbers. However, growth remains heavily skewed toward the service sector, where an acceleration of growth contrasted with a steepening decline in manufacturing. The goods-producing sector also reported a slight pullback in future expectations, in part reflecting worries over the impact of tariffs and inflations. I'm telling you, this has got to be the year where the durables actually start picking up. I think that's what we're going to find. Raw material cost growth spiked sharply higher in the manufacturing sector, though a further cooling of cost growth in the service sector helped to lessen overall inflationary pressures in terms of both overall costs and selling prices. It's kind of a mixed bag. I'm kind of surprised about the price increases in in commodities or things that are supporting manufacturing. Output and demand. The headline S&P Global Flash PMI Composite Output Index rose from 54.9 in November to 56.6 in December, signaling the fastest expansion of business activity since March of 2022. The PMI has now recorded continual growth since February of 23, with especially robust growth recorded over the second half of 2024. Activity levels were expanding at an increased rate in December in response to strengthening demand. New orders rose at the sharpest rate since April of 2022. Growth was once again uneven across the economy, however, surge in services, as we said. If pandemic months are excluded, the latest service sector expansion was the strongest recorded sales increase since 2015. While the latest manufacturing downturn was the sharpest since the global crisis of 2009. The two economies again. But remember, manufacturing is at the very most 20 to 25%, services is 60%, government's the rest. A similar sector divergence was seen in demand conditions. New orders for services rose at a rate not witnessed since March of 22, but new orders for goods placed at the factories fell sharply. The survey's forward-looking sentiment indicators suggest that growth could become more balanced in the coming year. Optimism about output in the next 12 months improved in December from the pre-election low. September, confidence was the highest in just over 2.5 years. And although cooling slightly, manufacturing confidence remains strong among the highest seen over the past year. A clearing of uncertainty following the presidential election has been accompanied by improved prospects for the coming year. So there you go. Optimism everywhere, even manufacturing, are getting more optimistic. How is all of this impacting the markets this morning? Well, here you go. Tesla is sitting up 8.92 at 445. That's almost the high for the day, now 892. Up 912. I mean, it's just going up as I'm sitting here watching. It's just going up and up. So now we're up at 445.35. The Dow is up 46.31. It's been up. It's been down. It's been all around. The Dow is now going flat across. The Nasdaq also flat across at 126.62 up. The S&P up 21.43. Also, all three very flat but up. Across the board. We've got the Magnificent Seven split with NVIDIA, Microsoft down, and all of the rest up. And we've got the Cathie Woods all up except for PayPal, which is only off 38 cents, but even Square is up $1.58. Understand PayPal and Square are roughly the same business. But RK, of course, up because why? Because Tesla's up. All right, let's see. Let's go back with the percentages, as you guys like to do. That would be the Dow is up 0.09, NASDAQ up 0.7, and S&P up 0.38, with Tesla up 2.09%, still sitting. So starting to flatten off just a little bit around this 445 level. Interesting. 445. Why would that be? Anyway, but it's been all over the place this morning. So I wouldn't count on anything with regard to it staying around 445 for very long. Okay, let's go ahead and take a look at the bonds. Okay, so the good news is the 10-year is off 1 basis point this morning to 4.389, almost 4.4. The 2-year down actually 0.5 of a basis point at 4.236, and the 1 month also down 0.5 of a basis point at 4.308. Currently lower than the 10-year. This is where it belongs, of course. You know this. All right. So where is oil? We've got oil down this morning, 27 cents. Still sitting at $71 for Texas Intermediate, 74 and a little bit, 74.19 for Brent. So now that $3 spread is almost there. We had a little bit of Middle East tension this morning, maybe some rockets coming out of Yemen towards Israel. But basically the Middle East is now calm now that we have, Israel and the United States taking charge as people worry about Trump coming into office. And I mean that in a good way. Natural gas down 1.8% this morning, sitting right kind of in the middle of where it's been, 3.222. Gold down $6 this morning at 2,669, back to kind of where it was sitting for a very long time in that 267, 265 range. Silver down 0.14 this morning, sitting right around 31, very, very flat in that range for a while. And copper down 0.11 at 419, similar. The dollar mixed this morning, but hovering near 3-week highs. And Bitcoin up another 2,922 at 106,100. So for those of you doing the Bitcoin, you're doing well. Good for you. All right, what do we got coming up this morning? You know, it's a very normal Monday. Brian White will be late, 7:45. Larry Goldberg around 5-ish California time. Everything's California time because that's where I am. Of course, I want to encourage you to go back. I think from yesterday, well, both yesterday's programs got massive numbers. You've probably seen both of them. In particular, last night's, yeah, you know what? I'm going to put both cards up. If you haven't seen either one of yesterday's programs, you need to watch both of them. Thank you very much for being so encouraging with your numbers, with watching all the time. The channel is growing nicely right now. Everybody's excited about Tesla. All right, let's take one last look. Speaking of being excited about Tesla, where is it now? It is now at 446.71. So that's almost the high for the day, I think. Let's take a look really quick. No, it was at 447.41 at one point. So it's headed towards the high for the day. I think we test 450. I have no idea whether we go through 450 or not. I'm not even going to guess. We will go through 450. The question is, does it happen today or does it happen in March? This is Randy Kirk. It has been great talking to you.